In last week's podcast, I told you I thought it would be a green week and that gold would have a huge fall. And gold had a huge fall more than it has since 2019, down more than 10% in a single day. And I think gold will continue down. Market so far this week is up 1.16% for Nasdaq and more or less the same for the two other ones, Dow Jones and S&P 500. It is Friday afternoon, and when you watch this podcast, it will probably be either weekend or we're getting ready to the new trading week, which will be week 44. You are listening to a StockInvest.us trading podcast, trading tips with Jim, and then of course I will be Jim. And this week's podcast will be a way different one because I will spend most of my time telling what I think you are doing wrong. But as usual, I will guide you through a few things, the major things that will happen this week. And at the end of the podcast, it will be the $1,000 challenge where I try to grow $1,000 as fast as I can. And the $1,000 was up at $5,555. Currently, it's sitting at $4,850. Had a slight drop. More about that in the end of the podcast. And if you somehow like the podcast, remember to subscribe and like. It's the only way to make sure that the podcast will survive. For the week ahead of us, there are three major items on the ticket. It will be Wednesday when we will have the Fed interest decision, and I believe it will be a cut. The board thinks it will be 0.25. I will not be surprised if it even can be 0.5. But it should be a good thing for market in general. Just remember that this is already baked into the expectations from the investors and traders. So if 0.5 will be very good for the market, while 0.25 probably just will keep the general push that is in the market. There will be GDP numbers, forecast is 3.8%, and GDP has surprised everyone every single time lately. The experts, they are very negative. Everyone says that we are heading for this and that. But in this podcast, you learn that I think it will be the opposite, and so far it has been the case, and I think there is just much more to come. Earnings are beating all over the plate, and everyone seems surprised. I don't understand why. You have to understand that there is a big change, a fundamentally big change, and especially US is raking the awards for this, where Europe is behind. And I don't think that we will see any real growth in Europe until next year, maybe in 2 years. Depends a little bit how the next few steps will be handled. Then there is core price index, the inflation. We will have more inflation numbers coming in. These are the three big things that will come next week, week 44. On top of this, we have Ukraine, and now we are again at a possible breaking point. And the thing that might break thing is that there is now imposed even tighter sanctions on Russia. On the oil of Russia, and the oil popped up by $7 up to 65 after being down at $58. Low oil price is good for all economies except the Norwegian one and other countries that Saudi Arabia, for instance, which is heavily rely on oil export. But in general, it's very good, and especially for the starved European Union, low energy prices is super good. Now it's jumping up. The expectations is that there will be more hassles with cheap energy, but I think it's very short-lived one. I think oil will just keep dropping. I told you this when oil was way above 100, that now it will fall. When it was 30 many years ago, I said buy oil shares for what you can. And now I'd say that you shouldn't sit in oil shares. That is my personal opinion. We will buy oil shares back again. I got out of oil shares at levels above $80. Actually more like $90 numbers. I got out of the oil shares that I had, which I bought very cheap. And I think there will be a new chance to get into oil. I like oil in general, and they pay nice dividends and all this. But I think if you want to buy oil shares, you should hold your horses a little bit, because I think oil will continue downwards more. I mentioned that gold had a huge fall. Gold was up at 4,400, fell just under 4,000, but popped up, currently sitting at 4,100. I think the steam is out of gold. As you know, I invested into gold at $1,600 per ounce, followed it all the way up to 3,000. Then I had to realize some or more or less all of it to take the opportunity into Nvidia and Tesla. Very, very good choice, but gold continued above my original target of 3,500, which I set so many years ago. But I really think gold is topping up, and I don't see why gold should be such a good investment moving forward, unless there will be more geopolitical tension. But my strong feeling says that we will soon also resolve the Ukraine conflict one way or the other, but we are again at that level where things can happen, because Putin said that once the Tomahawk missiles are coming into Ukraine and starting to go long distance into Russia, they will hit hard back, which in my world means that they will use some of the more heavy weapons, can include tactical nukes, which will scare the hell out of anyone if it happens. And for sure the stock market. That is why I started some time back to reduce my exposure into the market. Follow the podcast and you hear all of this. You hear me saying that I'm reducing my exposure, etc. 10-year Treasury yield, which also a very good measure for the stock market, keeps falling. 3.99, been under 4 now for quite some time. So we have GDP, we have Fed, and we have inflation numbers coming up next week. There is such a nice trend for the stock market. Again, I explained you all over this. That's why I argued why I thought markets would go up this week. That the trend is so strong, and it will take a lot to break the positive things that we see in market. There is higher chance that Nasdaq will continue straight up to 25,000, and it will dip. The dip that we had was natural. I told you that is why I 4 weeks ago said that I believe it will be red markets, and Nasdaq took a little nosedive to the bottom of the trend, now crawling perfectly in the middle of the trend. So in my humble little world, everything indicates that it will be yet another green week for the market. Can even be a very, very good one. Some things are brewing. Buy and sell signals, I always like to mention these things. They either confirm or go against what I say, but across all the tickers that we analyze, 36% is holding buy signals, starting to become a little high. Last time I said I believe it will be red market, it was 40. 36 is just under, so one more good week, and then we maybe could look at some sort of corrections. Again, Nasdaq only 90%, plenty of stocks that have huge potential for upside at Nasdaq. New York Stock Exchange 34 going up a little bit, London also going up a little to 40. We have Oslo at 25, Frankfurt at 55, and National Stock Exchange of 24, Tokyo at 37, Shenzhen China at 30. All of them climbed after good stock markets during this week. I believe that, as I said, I believe it will be one more week with good numbers. That is all I'm going to say about next week, and for some 10 plus more minutes I will tell you about trading and how I see trading. And the first thing is that most of you are losing money. I'm very, very certain about that. There is around 1,000 people listening to this podcast every month across all channels. And I strongly believe that 900 of you are on the bad end of the stick. A few of you are doing very, very well. The rest of you are struggling to get along. And based on my experience and everything, I have a slight feeling that I know a little of the reasons. So I will tell you a little about trading, because I know that is also what most of you do. Very few of you are investors investing for long horizons. I try to spend so much time trying to tell you about the bigger trends that I see, what what is the next. I just said that I think oil will go down, and many years ago I said gold will go up, these bigger trends, and invest accordingly. You have to be so patient being investor, because you will not reap the reward tomorrow maybe. It can be up to years. The biggest of all the trend related things I have done, let's say over the last year, is I have strongly positioned myself into EV, because everyone is telling that EV is and now it's no future for EV. I see it very differently. I used the chance to buy, for instance, NIO very low, currently sitting at a nice profit, and I think it'll just continue upwards from the logic that the world is not going to be fossil cars. That thing will slowly be faded out, no matter how we like it, because there are so much pluses with EVs. And I believe if you find the right companies looking 10 years ahead, you will sit with a good reward where the risk on the downside is less. So that is an example of how I try to use trends and how I follow it personally and been doing. Back to trading. Most of you are traders, and every day you wake up, you start on the stock exchange, you check the market, you check your account before you see it's red or whatever it is, and you wonder what to trade. You go to Reddit, you listen 3 minutes into this podcast trying to see if there is anything, then you jump further on. It's just a way to lose money, absolutely the way to lose money. Let's start with the very easiest and simplest thing. If you sit with geared products, just get out of it. Just make the decision today. Get out of it. It is shit and nothing but shit. It's a guaranteed way to lose money. Absolutely. There, even at these pages where they offer geared products, etc., they say that 78 or maybe it's even over 80% of all investors lose money. It is higher than that. It's the lowest number they could find. So if you do geared products, 5 out of 100 will be able to make something out of it. Yes, I do know the difference. When you have a little trading amount, I know the difference of being highly exposed into it. In a single day, you can double your values, your portfolio, using geared product. But I also swear that many of you listening now, you have had that joy of seeing these insane upturns just to see it go away. I like TikTok. I follow TikTok. I thought it was very innovative when it came, and since I'm into this world of trading, I see a lot of trading videos. And there was this one girl that started to act like she was professional. She showed everyone how she was trading. She was making some money, and then started to promote affiliate products for the trading. And suddenly she just stopped everything because she lost money, and now she opened again her trading account just to show that TikTok users, I don't know what, to get the sympathy, trying to get anything, but she had lost more or less everything. First off, you're not an expert. Even I am not an expert. So we start with that simple thing, that we are not experts. And if you're not an expert, you try to seek advice or information where it can benefit you the most. So, one, we do not do geared trading only if you're absolutely 100% certain and that you are really good. Otherwise, just stay out of it. You can make $1,000 grow. I have gotten it up to 4,800 now, showing you just what I do. It's absolutely not a problem. I started with $400 back in the days. It is just about mentality. So if you are in geared products, get out of it. And the other thing while talking about these things, if you are at some of these shady kind of broker things, get out of it. Get into your, most banks today offer stock trading. Some of them have a little higher commission, but get into something which is better. Interactive broker, I like personally myself. It's not a recommendation, but there are so much better real things than these shitty forex scams and all this sort of things. They are made for you to lose money and nothing else but lose money. So get these two basic things. Get a proper account somewhere and understand that you are not an expert. And if you are an expert, I'm very happy for you. When we manage these two things, we have already lowered our risk substantially and we are ready for trading. And trading is a game which I've been into, and I was fairly good, to say it the least. But it also got to me at very, very unpleasant ways, because trading requires focus. If you are not able to focus, if you are not able to stay alerted with high cortisol levels during the day, don't do it, because it will play your mind, and it will really play your mind very hard, because you will be in super profits. Then it suddenly just drops, especially if you're in gear products. You just go to have a dinner or whatever, and you come back and your nice $3,000 profit, $230, $35, whatever level you are at, is gone. And you go for 3 days of losses, and your nice profits are back, and this just messes up you. It messes up everyone around you, because you get into a bad circle with bad mood and all of this. Only a very, very few of you are able to be so hard that trading is just trading, and you don't matter. You don't sleep bad if you lost 20% one day. You don't sleep extra good if you made 20%. You treat it as work and nothing but work, because that is how you should treat it. Treat it professional, because emotions is the one thing that messes up with you. You start the day on high emotion, end the day on low emotion, or you do stupid things because your emotions is untouched. You have to have discipline, you have to have structure. And there is no way I can in a few minutes tell you exactly how to do it, but I can give you a few tips. Do some sort of research before you buy. Have a specific reason to buy the stock. If you trade, for instance, we know that Tesla is moving a lot up and down during the day. It has a lot of trading volume. You want that. If you go into any sort of penny stocks, remember that the liquidity can disappear just within a few minutes, and there will be huge price gaps. And when you have to sell because you sit in a geared position that has to be closed during day, you will not get out. You just have to lower your price, and hence you will lose money. I've seen this so many times. I even did these mistakes in the very beginning myself. So at least know what stock you are going to trade in. There is ways to reduce your risk, and one of them is making sure that you are in a stock that is liquid enough, meaning there is enough trades in the stock. And if you still sit there and you think, no, I will go into the penny stocks because they can go 10 and 20 and 30 and 100 times. Yes, absolutely. I can tell you honestly, I lost $18,000 in a single penny trade. No problem about that. But the thing is that I only use a very, very small portion into penny stocks, because these are too volatile, it's too high risk. Still, I know there is an upside, but it's just a tiny part of my portfolio. And if you get it correct, yes, you can do 1,000, 10,000 times. First off, you have to have a little of luck, and you have to know what you do. Absolutely, I don't say that you shouldn't do it at all, but not with your entire portfolio, a smaller one. So we find the stock that we like to trade. The next thing that you should do is FOMO is absolutely present with everyone. The fear of missing out. Most of you buy instantly when the market opens, but all statistics shows, absolutely all statistics, and I've done a lot of statistics. I even made programs for this, showing that the best time to buy is 15 minutes after opening hours. Then is statistically the lowest point for the next few hours. So either the exchange opened very hard hard down, it finds a button usually 15 minutes after trading, and then goes or opposite. It starts very up, it has a dip after 15 minutes. Here alone you can save a lot of money. I even made a pattern recognition item which shows which time during the day is absolutely best time to work, because there are certain patterns and it works. In general, just know this: 15 to 20 minutes after exchange open is usually a good buying point. Around lunch hour, 12:40, is another good buying point, and the best selling point is usually 3 o'clock at the end, just an hour before trading ends. These are just small tips that maybe will help you a little bit. So we have these general things, but what you really need to pay attention to is the volume. Let's assume that you want to trade into Tesla stock, and we want to buy. First off, I want to buy at the best possible level. So what I do is I check the chart. If trading already have started, I check the chart to see if it's above or below support levels. Support levels you will find on round numbers. 240 is a support number, 440 is a support number, 450 even better support number if the stock is above. But in general, you can use accumulated volume, see how many trades were made at a certain level. If it has broken down and above the stock there is a lot of resistance, the chance is that the stock will push down. I personally will not go set my position if we are having a lot of resistance above. No, let's take Tesla for example. Again, let's say that you come to your trading, Tesla been trading for half an hour or whatever it has been trading, and you see that there is a lot of stocks sold at $445. The price currently is $442. It means that there is a sell pressure. You can also see the ratio between buyers and sellers, which is a good thing if you have access to it. The next thing, so we know that okay, there is resistance above, is to see where is the support. We know that 240 will be a psychological support level, but we can see that there is put on a lot of trades around 239. And even if 240 is support level, I personally would wait till the stock is closer to 240, 239 before I set my trade. And I set my trade 240 because I see so much support. If the stock, and you can expect the stock to fall to 239, 238, 238.50 without being a crisis, you just have to follow the volume. And if you have access to a volume chart, it's even better, because you want to buy when the volume is as low as possible and sell when the volume is as high as possible. Very simple rule: buy low, sell high. Sell when the volume is very low, because the interest for the stock, and look at any stock chart, look at our stock chart at stockinvest.us, you will understand what I mean. A stock usually peaks out when the volume is very high, selling point, and it bottoms out when volume is very, very low. If a stock does opposite of these things, you can trade on that as well. It's a different trading game, and can reap even more rewards. It's called so you can trade on, it's called divergence, and I love divergence trading in general, but these general principes, sell when the volume is high, buy when the volume is low, is such a good simple trick. So if Tesla in this example is falling to 240, 230, the volume is getting very low, I buy. If it breaks and I accept some tolerance, because I don't expect to hit the exact bottom, I have some tolerance for the stock to go down. and you can find some numbers for these related to the risk of the stock, of the movements, the ATR, and all these things. But in general, as just as an example, if Tesla then falls to 237, I believe that the best thing that can happen is I will get my money back at 240 because the stock will keep pushing down. It has broken the support level, it will continue downwards. No, but let's say that the stock goes up. I do somewhat right. I bought Tesla at 240, it goes down to 238, then starts to tick up. I see the volume tick up. I'm very, very happy. I follow the volume. I expect there was a lot of resistance at 245. I expect this will be the place to get out. The greedy one, he tries to sit to 245. The smart one, he starts to sell at 244 because very often the top comes very fast. The stock pushes a little bit. You have to be very accurate and then just drop. There might be 1 or 2 trades at 245, but then it just drops down. And now the big question is, will it then stay above the support level? In most cases, if we have this pattern, which I just told you about, happens, you can expect the stock to fall down to what, 242, and then break up to 245. So I can set a new trade. Again, I will have to follow upwards to 245, but this time I have a little more patience because it's a higher chance. One of the things that I really watch then is how is the volume, because if the volume again when reaching 240 high is at very high, you look at the chart and you see where the volume is during the trading. If the volume is very, very high, I don't believe it will break. I want the volume to be half so it has enough push energy to break through. And when it breaks through, if it's been moving between 240, 245, and it finally breaks 245, expect it to go to 250, and you sell out at 248, 249. You have done your trades. And here comes the second lesson. At best, you're able to do 2 of these. Don't get tempted to do the third unless you flip your position, which is a totally different game. When you have done successful trades, most of you will get so eager. You want to push forward, continue. You see that you master this. You understood what I said. You do this. You follow the logic, but the logic doesn't always apply because at some point there can be some news. It can be what I said, GDP numbers coming out. It might be the Wednesday you are trading. GDP numbers come out and Tesla falls down to 236 because of GDP numbers. Sorry, that's Thursday. Or Wednesday in this case will be Fed because Powell said something and the stock goes down. So don't overdo it. Relax. Secure your trades and the profit. Don't reinvest the profit the same day. Leave the profit at the bottom. Stay with the same trading amount you have. Go back, reevaluate, look for other stocks that can offer a better position because you just want that trade where you sit just above support level and the volume is low because we want that stock price is next to support level to support. And the volume is very low. That's the kind of position we want, and you might find a much better one in other stocks. That, my friends, is all I will say about this. I choose a different way of doing the podcast this week because in the end there is only one thing I really hope for is that you, sitting on the other end of the screen, wherever you are, US, Hungary, Norway, wherever you are, I hope for you that you can make money. I really wish that you can turn your trading because I've been there and I know most of you have ordinary jobs, you have an ordinary life, some of you are even students, some of you are pensioners, and you just want to get a little extra. The clue is patience. Be strategic and be patient. In the $1,000 challenge, which I will end this podcast, is I invested into NIO after growing the podcast. Growing the $1,000 up to what was it, 3,400 something. Then I invested into NIO. And I gave you arguments why I bought NIO. I bought at 5.1 and we had to sit and wait. It was dropping even lower than that, and I just said that I have such strong belief in everything because all I see is the right things. But we had to wait, and suddenly it started to boom and went very, very fast up to 8, and I told you when it happens, use the chance to sell around 8 because it most likely should have a reaction back, and I thought that the reaction would be at least to 650 or something. And NIO did exactly that, but been pushing a little up, currently sitting at 689 after giving a profit of 35%. So the $1,000 challenge where I try to grow $1,000. I always tell you overhead what stock I will buy and when I will sell, so you can see that it's absolutely real. I will not sell before I tell you first, meaning that I currently sit in NIO 690 seems to me to be a good price. I believe NIO will go to 24. That is my bet. I don't think that it will sit that long in the $1,000 challenge, but right now I cannot see anything else that really triggers me to go into NIO been pushing above 7 and now there is resistance from 750 to 8 like it should be, but NIO has broken the falling trend, established a new uprising trend, so it's just a matter of time. If things starts to get ugly, NIO will take a hit like everyone else, and in worst case it can fall all the way back to 5. Can happen for sure, but my bet is that NIO will push. I don't know if it will happen this week, if it will happen today, next week. If it goes down to 580, I cannot say for sure. If I was trading this stock, I would do it differently, but now in the $1,000 challenge, which allow you to see, I will not sell NIO this week. I will not even have a stop loss on it. You should have stop loss on it because it's too volatile and I expect markets to take some irrational moves, and I will sit in NIO with the expectation that very soon we will see 8 again and even pushing upwards. $1,000 challenge currently $4,850.96. That's the balance of the $1,000 I started with a year ago. I'm way behind schedule. I wanted to be at 10 times by now so we could start to go into different stocks, but it is what it is. A few bad mistakes during the way, a few bad decisions. Should have been differently, but no, that's how trading is. 32 minutes, I did my duty. I made the podcast. I hope you found something useful. I hope you like, I hope you subscribe, and if you don't, that's totally fine as well. As I said, more than anything, I hope your portfolio will be much greener by the end of the week than in the beginning of the week. Bye.
Welcome to StockInvest.US Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.US. By using the information you agree and are held liable for your own investment decisions.